All right. Hello, everybody, and welcome to day 3 of our boot camp. We are halfway through. Good morning if it's morning. Good afternoon if it's afternoon for you. All right. Like I said, it's day 3. We're going to go ahead and get right into this. As you all know, we have been getting into the strategy starting yesterday. We had to finish that first part off. So remember, we have the where plus when y equals trade. Yesterday, we were focused on that where part. So that's just finding those key areas of liquidity or those key areas of interest on the chart where we want to potentially be active in the market. All right, so we got through support and resistance, trend lines, chart patterns, supply and demand. We just have to go through imbalances, and then after that, we'll start getting into that second part of the formula where we'll start to analyze price and volume at and as we're approaching those levels, all right, to confirm our bias, and then we'll go through some examples. And I know it's been a lot of information, and it's just going to keep getting more and more information as we go through. But it's okay. This is a boot camp, so if you have to go back and rewatch to get, a better understanding of things. Sorry, that's perfectly fine. Okay. Now let's get right on into this. All right. Again, like I've been saying, I don't like to sit on the chart or on the PowerPoint for too long, so I'm gonna just quickly explain this, and we're gonna head to a chart so we can walk through some real life examples. Okay. Balances and imbalances. This is one of those key areas that we are going to be looking to potentially take a trade at. All right. Remember, this is what we're doing during pre-market. We're looking for these levels, marking these things out. Okay. So as far as balances and imbalances go, essentially all we're looking for is a dramatic move in price, whether it be up or down, followed by some sort of consolidation. All right. And then to actually use this level for a trade entry or whatever, we're going to need to look for a key level of short-term or long-term support resistance, just depending on the time frame. All right, so we see here we have this dramatic move up. That's going to be considered our imbalance candle. All right, and then we have that consolidation that forms. The market is balanced, okay? And then we have that level of support. And essentially what we're looking for is to get an entry at the break of the imbalance and to be able to fill the imbalance. Because what this imbalance is it doesn't have a lot of trading activity within this area. So once we get past this area of high trading activity, which is that consolidation, once we can break out of that, filling the imbalance shouldn't be too difficult. And so that's really what we're looking for when we're looking for these balances and imbalances. All right, like I said, I'm gonna head right over to a chart to go over some real examples or some examples in real time. All right, I think we're gonna do 4 examples, and then we're gonna move on to the second part of the formula. And you should be able to see my screen in just a second. All right, so let me just take this off. So usually we're gonna be looking for these imbalances and balances along with support and resistance, trend lines, chart patterns, supply and demand during pre-market. So starting on the 4-hour, looking for all those things, starting on the 3-hour, looking for all those things, and then going down, 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 down. Okay, but for now, we're just focusing on imbalances because we missed that yesterday. So I'm just gonna go through a few examples of imbalances, and then on Friday, we'll do a full walkthrough of the entire strategy. So we'll chart, and then we'll do the rest of the stuff that we haven't talked about just yet. All right, so anyways, remember, we're looking for a dramatic move in price, some sort of consolidation or some sort of balance in the market, and then really that level of support or resistance, to use as an entry. All right, so we can see here, I'm on a 4-hour chart, and I'm gonna go through examples on different time frames so that you can see how you could use this on different time frames. For those who wonder, can I trade on other time frames? Yes, you can. All right, so we have this big dramatic move up, right? This is going to be considered our imbalanced candle. All right, and then remember, we need to find some sort of level of support or resistance to use for an actual entry. So we see we have this level here where we have touch here, touch right around here. So we got a little level of support that formed. All right, so this is a 4-hour level. So as a scalper, you would, wonder, how would I use this as a scalper? And then you'd also wonder, well, if I'm not a scalper, can I also still use this? So we're going to go through 2 examples or 2 different ways you could use this level depending on your trading style. All right, and also just for the sake of marking out everything, remember yesterday that the supply and demand zones that we talked about. We see right here, we have a little demand zone. We got this small red basing candle, and then this big imbalanced candle move up, okay, with nice continuation. All right, so we're gonna mark that from open to high like we talked about. All right, and you can clearly see we came down into that zone of balance, but let's just talk through this and see how we use this. All right, so let's say you're not scalping, right? Let's say you're not scalping, and you're, maybe you're wanting to trade a little bit more longer term, for example. Okay, so we have this level of support or buyer's hold, whatever you want to call it, same thing. Okay, it's also valid on the 1 hour, so I just mark it as 1 hour for now, where we have those touches. Essentially, you're waiting for the break of that level, and then as long as we stay under that level, we're looking to fill that imbalance. All right, so as someone who might not want to scalp and hold this for a long period of time, essentially, once we get the close below that level, you can get into the shorts. You would place your stop above that level. We'll get more into that tomorrow, actually, as far as getting specific about stop losses and targets and everything, and trailing all that position size. But just for now, just quickly, you'd obviously have your bias now because we've broken that level of support. Okay, as long as we stay under this 19,489 level, I'll be interested in shorts, looking to fill the imbalance down into that 4 hour demand zone. Remember, we had that 4 hour demand zone. All right, remember I said we can use all of these levels as entries, targets, and stop losses. Okay, so in this case, once we get the break of that level here, you can see we have a nice break of that level. Okay, entry would be at the break, or if we want to wait till we retest. Okay, you would use that level as a stop as well. Okay, stop loss a little above that area, and then you would target down into that demand zone. That's just overall how you could play this out for someone who doesn't want to scalp. Okay, that's pretty simple. But as a scalper, how would you use this level? How would you be able to use a higher time frame level to actually catch, a nice trade? All right, so say it was pre-market and we're charting and we've already broken this level. All right, the way that I would use this as a scalper is very similar, but we're just going to go on to some lower time frames. Where'd it go? Gotta find it, guys. 1 second, let me go bigger so I can find it. Actually, here we go. Let me just get rid of some of that. All right, so anyways, as a scalper trading on the lower time frames, imagine I was sending this out in the daily levels. I would say, okay, guys, we just broke below this level of support at 478. We have this imbalance below us that we could fill. As long as we stay under 478, I'm going to be looking for an entry, okay? And I would probably like to get an entry around 478. All right, so as a scalper, the way you could play this out is very simple. You see, we ended up breaking, we moved down a little bit, but since we know as long as we stay under 478, then we're good for shorts. Once you get back up to that area, get you an entry, stop loss a little above the area, and you can target down to whatever the next key levels are. And then when we're talking about imbalances, obviously on this 4 hour, it looks like a very clean move, right? A very clean flush up. But when you are scalping and you are trading on those lower time frames, you have to be mindful that there are lower time frame levels that you may see some sort of reaction at. So when you do have an imbalance, make sure that you're mindful of, just going onto those lower time frames and seeing, okay, going back. Within that imbalance, where are some levels that you may see some sort of reaction? Okay, so these are levels that you can mark as, potential targets. So I would probably mark around here, maybe around here, I don't know, we'll see. And that's kind of that general same here, maybe above, below. But yeah, something like that. All right, so when you are trading this on a lower time frame, you can know where to actually target to, okay? So I think I should be going under. Actually, no, it's fine. So anyways, say you was in those shorts and you got in at the retest of 478. Once we pulled back up, well, you can see here, we actually did have that first tap there. So actually you would need to go get more levels. So hold on. The next little area would be right around here, maybe right around here. And again, these are just levels that, you know, the market reacted to a little bit before, okay? So we just want to watch if we are in shorts to see if we are going to get some sort of reaction at this level. And again, we're just doing this because we have the full imbalance on the 4 hour, but when we're scalping on lower time frames, we need to know where within the imbalance can I see some sort of reaction, or where can I possibly use as a target. And again, tomorrow we're going to talk more specifically about, you know, those targets and everything. But for now, just to break this down in a pretty simple way. And there goes that second level. So we wouldn't need that one, but there goes that second level. So if you did get in at the retest, you wouldn't need that one because it already touched. You wouldn't need this one because it already touched. The next level that you'd be looking for would be that the level that we just drew out over here at 287. Little baby level. And you can see we got that reaction as we came down to that level within the imbalance. Sorry, I don't know why I'm doing that. Okay. And you can see the bounce off that level. Okay. All that to say, not super detailed right now. Exactly. It is good to be aware of these levels. That's what I'm saying. Even though they are little levels and they might not be super important, you need to be aware of them so that you can know, if I am in shorts, where do I need to watch? Because the market can reverse on you in an instant and you don't know why. But if you just went back a little bit and looked within those areas, you can see, okay, this is where the market could possibly reverse on me, and I can be aware of this. So that I don't end up getting stopped out or losing my profits because I didn't chart my levels properly. Okay, so that's how you would use that as a scalper. Simply just wait for the retest of the level, or wait till price is up at that level. Look for an entry and then go within the imbalance, go back within the imbalance and look for those areas where you could possibly see you know, some sort of reaction or use as a possible target. Okay, obviously the overall target would be in that demand zone, which eventually we did come into and then move up. However, as a scalper, obviously we're not gonna like get into shorts here and then let the market come all the way back up here. It wouldn't make any sense. Okay, especially like this here, that's like a 700 tick move. I wouldn't even probably catch that whole thing. But the point is, as a scalper, you're not gonna sit through all this pullback, right? So you got to know how to use those levels on lower time frames. But if you don't want to scalp, that's why I said before, you would just play the overall levels, play the overall higher time frame levels. All right, so you know, you get in, stop loss a little above the area, overall target that demand zone, and you're good. Okay, so that's one example of an imbalance. I'm gonna go to a little lower time frame level. Trinity, would you mind slowing down a little? Yes, let me talk a little slower. All right, guys. Let's go to the next example and let me go a little slower. All right. Is there anything that y'all need me to repeat on this part? Let me know before we move on to the next one. We're going to do more examples, so, but if there is anything y'all need me to repeat on that specific example, let me know, okay? All right. Next example. Oh, how many ticks do I consider an imbalance? It's not necessarily about the ticks in this case, because I'm going to show you an example on the 5 minute where, like, so we see this is an imbalance here, right? But then there's also imbalances that might just be 100 ticks. And we might just scalp that 100 tick imbalance, you know? So it just depends. Well, we're going to go through some examples and you'll see. Do I use any specific patterns for my entries? No, I don't use those candlestick patterns, okay? No. All right, next example. Let's get to it. We gotta get to it. Somewhere over here. We'll find it in a second. There we go. All right. All right, so remember, guys, same thing. What are we looking for? We're looking for some sort of big move up or down, and then consolidation, support or resistance, and then we'll use that as our entry. All right, so let's go through this one here. And then we're gonna go to an even lower time frame example on the 5 minute. So this is the 30 minute, okay? Just doing this to show you guys that these levels and these zones can be on any time frame and you can use them regardless of what time frame they're on, okay? Whether you're a scalper or whether you're not a scalper. All right, are imbalances only when price goes up? No. We're gonna go through an example where we see an imbalance where price goes down and then we look for longs to fill the imbalance. I think it's the next example. So here in this example, it is another example where the initial imbalance candle does go up. But we see we have that big imbalance candle move up, all right? Even on this 30-minute, still have that nice imbalance. We do still have some consolidation and some level of support form, which is what we're looking for, all right? And so we're gonna be waiting for the break of that support to move down and fill the imbalance. All right, guys, and it's important to note, as far as imbalances go, for us to use them, or for me specifically to use them within my trading, it needs to be a nice flush, and then we need to see that level of support or resistance form. Obviously, we have a lot of times where the market just flushes up or down, but if we don't have that nice level of support or resistance for me to actually use as an entry, then I'm not going to care too much for it. Okay, the point of these, the point of this is to find a nice entry to fill the imbalance. Okay. All right. Hold on. Your voice is not very clear most of the time. It's fine, but at many times it's so low I don't understand what you mean. Guys, is the audio messing up? Like, is it too low? Okay, James, I think it might be your computer. You might need to leave and then come back and see if that helps. Okay, okay. I was worried. I was like, do I have to switch computers? Okay, yeah, James, try that and then see if that will work. Okay. All right. Okay. All right, guys. So in this case scenario, we got that imbalance candle, we got that level of support that formed, and we're looking to fill the imbalance. Another thing I'll do sometimes, guys, is I'll look at SVP volume, okay, session volume profile, right? And I'll look to see where the imbalance may not end. Obviously, I can see the imbalance ends here, but just for more confirmation, like if I am in shorts, just to see where we may start to see some reaction. So this basically shows you, there's a lot of trading activity going on up here. Within this general area, there's not really much. And then once we get back down here, the trading activity picks up again. Okay, so if you are in shorts, then, it might look something like this, right? And you can target, at the end of the imbalance, and just the SVP volume will help confirm that this is a nice area for you to target. Okay. Okay. Market. All right, so that's that there. And again, this can be used, although it's on a 30-minute level, you can use it on these lower time frames as well. All right. So let's see if you want to make it a little bit better on this 5-minute. The way that I would use this specifically, obviously we get the break of that 609 level. We got this level up here that formed, little trend line. So the way you could do that is get an entry at the break, okay? And then have your stop once we start to push above the trend line, okay? And then you target to the end of the imbalance, okay? At the end of the imbalance is, where you start to see, this is not consolidation, but where the flush ends, where that nice big move ends. Okay, so that's another little example. We're gonna go to even lower time frame now, just to show another example of an imbalance and how we can use it. These are pretty simple. It's really nothing too difficult or too complicated. Who was the author of the volume profile? For those wondering about the session volume profile, it's no author. It says it's just session volume profile HD. Because I know some people are probably going to add that. Session volume profile HD. Okay. And the settings, I think I deleted it. The settings, you can make the colors whatever you want. Just the histogram box, turn it off. But other than that, you can make the colors whatever you want. Previously, they were white and yellow. Now they're red and blue. You can make them whatever. Just to show you guys again, this is the settings for it. You can change the colors. All right, the histogram box, you just want to turn that off so it's not causing big stuff on your screen. And then the POC, guys, this white line, that's called the point of control. Essentially, that's going to show you where you have the most trading activity. Okay, so a lot of concentrated trading activity. All right, so that's what that little indicator does. Don't use that all the time, but if I ever am looking at imbalances and looking to see just to confirm where the end of an imbalance is, or to confirm like, are there levels within the imbalance I need to watch for? I will use that. Okay. Next little example is going to be on a 5 minute. Okay. Doing all different time frames so that you guys can see that these levels can be used on all the time frames. All right. Let me see. Somewhere around here. Here. All right, guys. Let's do this example now. All right, so this was pretty recent. This was like 2 days ago. This was Monday, so or Tuesday. Oh, this was yesterday. Is this yesterday? Yeah, this was yesterday. All right, guys. So this is a 5 minute chart. Okay, so we see, well, let's put the whole thing together, okay, to show you guys how you could use all of those levels that we learned about previously as well. All right, so let me just go to the 1 hour, okay? Remember yesterday we were marking out support and resistance. We marked out around this 238 level for support, or for resistance, I'm sorry. It was previous resistance, and then we marked it as a wash level. Remember we had touch, market broke, and retested that level. So this is still going to be a key level for us. Okay, we're just going to mark it as a watch level. All right, so we got to keep that in mind when we're about to talk about this imbalance above us. All right. All right, so going back down to the 5 minute now, and this is where looking at multiple time frames, why I like to look at the 5 minute, 1 minute, and 15-second, because we see on this 5 minute, you know, we have price come back down to that 239 level. We retest, we bounce, okay? We do have this nice imbalance here on this 5 minute. Okay, so for the person who asked how many ticks it needs to be, this one here is only 150 ticks. So it's a little different from supply and demand. I'm not necessarily looking for this 300 tick move for it to be considered valid, because within this 5 minute candle, we have a nice imbalance. It doesn't need to be huge. I can still use this little imbalance here. All right, now the reason I'm talking about multiple time frames or looking at multiple time frames is because here you can't really see that nice level of support or resistance to use as an entry. However, when you come on down a little bit to, you know, the 1 minute, I don't know about the 15-second, if it's a little bit too much. Yeah, probably just the 1 minute for this one. You can kind of see a little clearer level of, you know, resistance form here, where you could actually get an entry. Okay, so we know we have the imbalance on the 5 minute. Okay, so we know we have that imbalance on the 5 minute. All right, but we might need to use the 1 minute for actual entry, and this could go at any time frame. So this is why it's important to not just look at one time frame, but to analyze all the time frames and see if they work together and if they're working in confluence with one another. Okay, so we get the bounce off 239. Right, we know we have an imbalance above on the 5 minute that we could possibly fill. Okay, at this point, we're looking for some sort of resistance or support for entry. We can see here we have this little level of resistance form at 263. So it's also important to note that these where areas, whether it be support, resistance, trend lines, chart patterns, supply, demand, they can form during this session as well. So most of it is done during pre-market or marking out those levels, but some of those levels can still form during the actual trading session. You can use those for entry. All right, that's starting to click, makes sense. Okay, good. All right, so we have touch here, can't close here. We see, you know, buying volume is a little stronger this time as we move up, right? But still unable to close. It wasn't until we got that close, we started moving up, and we filled the imbalance almost perfectly, right? Before we started to see some reaction. And you know, me personally, if you guys have been on my lives, or a lot of you guys are probably new to watching me live trade, but I like to catch the flush and I'm done. Meaning I like to catch those moves that look like this, or that look like, where's my tool at? Or that look like this, and then I'm done. Okay, I don't like to sit through all this pullback and all the little chop and the slow volume and all that. I don't like that. So for me, that fill of the imbalance would have been enough. Now, obviously this time, after we, you know, had that little reaction at that imbalance, pulled back a little bit, you know, we ended up moving up. But if you're like me and you don't like to sit through all the pullback and the choppiness, just to catch those flushes, this is something that you could look for, is just a simple break of support or resistance to quickly fill that imbalance on these lower time frames and then be done. Okay, so this is a 5-minute example. How many ticks was that? If you would have got in at the break all the way up to the top of the imbalance, about 140 ticks. So pretty decent scalp, okay? Pretty decent. So yeah. Can you show us one of your trading recordings? You actually have access to all the trading recordings from this week. I don't know how many people on here were on this morning, but if you were on, you saw we caught those longs this morning. And if you was not on, you do have access to be able to watch that recording if you would like. All right. All right, guys, that makes sense as far as imbalances go. Oh, you wasn't able to get on Discord. Okay, definitely try again. And if you can't get in, email me. Where would you start, King? Where would you, what do you mean? Where would I start where? Where would I start where? When a pullback happens before touching the supply and demand zone, what confirmations do you look at to decide if it's a pullback or reversal of trend? Like, are you saying, okay, we'll have to go do that later. All right, just be mindful, keep that question in mind for later. King, if you can, whenever you want to clarify about where I would start, I'll answer. All right, guys, but as far as imbalances go, those are just 3 little examples. Really quickly, let me just go through one more example. It's 6:26. Let me just one quick example. Just to show you guys why you need to make sure you have your levels marked out all throughout the chart. All right, so look, gonna be quick. What are we looking for with imbalances? Big move up or down, in this case, move up, some sort of consolidation, and then a level of support, okay? Now, in this case, at 18,984, the imbalance didn't get filled immediately, right? We have that imbalance, right? But it did not get filled immediately. And also, by the way, guys, when I am marking imbalances, I don't actually mark them as support or resistance. I mark them as imbalance below. In this case, imbalance below. But if it was opposite, it'd be imbalance above. And then this is a 4-hour, you just add your time frame. All right. So imbalance below on that 4-hour, fill the imbalance. That's what we're looking for, but we never fill. Okay. Now imagine I take these levels off my chart because we start to move up, right? I'm not going to be aware of these levels. And a lot of people say, how far back should I chart? Try as far back as possible. All right. Because you need to know that these levels are still there. Just because it happened months ago doesn't mean that if the market doesn't come back down to this area, it's not going to see some sort of reaction. All right. So look here. What is this? June 10th. And then this is like near the end of July. Okay. So a month later, even though price pulled super far away from that level, we come back to it, it's still valid. It doesn't take away from the fact that these levels are still valid. Okay, so a lot of people are wondering how far back as possible. Okay, you can see the bounce off that level initially, right? You can see the bounce off that level initially. So you would know if I'm in shorts, even though this level is super old, I need to be cautious of this area, right? I need to be cautious and could possibly use this as a target for shorts. And you can see the bounce off of that, right? Or you could wait for the break of that level and, you know, catch a little scalp. It would have been small. It did fill the imbalance though. It looks small, but here, yeah, it's huge. Almost 1,000 tick move. Okay. And it did fill the imbalance actually. So just wanted to show you guys this little example just to quickly say, make sure that you're marking out your levels and leaving them on your chart as long as they're still valid. Even if it's been months, even if it's been weeks, whatever, leave the levels because the market can still react even if it's been a while. Okay. Would you have traded the break above that initial consolidation? Yeah. Yeah. Yes. I mean, this is a 4-hour chart though. So obviously, you know, I would have to, it wouldn't just be like, oh, we broke, I'm going to get into longs. But yeah, essentially the shift in market structure would, you know, say now I'm going to be looking for longs above 121. But yeah. All right, guys, just keep that in mind. Just wanted to tell you guys that. All right, now let's head on back to our PowerPoint so that we can get to the second part of the formula. All right, let's do that. And we're going back now. Let me actually get out of. All right. Well, before we actually go to the second part, just to give you guys a brief little recap of what we just did before we move on. All right. So guys, we just went through the first part of the formula. Okay, that's that identify part of the formula. Just for those who don't get it still, we're just simply identifying areas where we want to potentially be active in the market, okay? This is where we're saying watch price at or as we're approaching these levels, okay? And those levels that we just learned yesterday and today, key levels, historical reactions, or support resistance, simple. Patterns or trend lines, supply, demand, balances and imbalances, or levels from order flow, okay? If you want to learn more about order flow, I have a video in the Discord. But for now, this is that first part of the formula. Keep in mind, this is just areas where we want to potentially be active in the market. This next part of the formula is going to break down, analyzing price and volume to be able to confirm our actual bias. All right, so here we get into it. Confirm when, why. Like I just said, this is going to be so that we're not blindly taking trades just because we're at a level. Because like I said yesterday, no one's going to be able to tell you 100% this level of support is going to always work for you, or this trend line is going to always work for you. It doesn't work like that. The market's not perfect. And so you have to learn to read the market, even at your levels, to know, is the market going to respect your level today or is it not? Okay. So that's what we're going to be learning, how to analyze price and volume as we're approaching our levels, whether we're in a trade or whether we're waiting for a trade setup to form. All right. And the two things that we're going to talk about as we go through this, they're very simple. It's really not a difficult concept. It's just a lot of people don't do it. And so we just need to be mindful and be intentional about doing these things, as we're actually trading. Okay. And this part is going to either validate or invalidate, those levels from that first part of the formula. All right. So very quickly here, first thing that we're going to be looking for, whether we're in a trade or as we're approaching a level looking for a trade entry. Okay, and this kind of goes the opposite too. So it's strong buying or heavy selling, but you can also think of it as weak buying or weak selling, just the opposite. But when we're talking about strong buying or heavy selling, pretty simple, like I said before, we're just looking for a noticeable surge in trading activity, indicating a significant market participation, right? A lot of volume. Okay, big candle bodies, like it says down here. Just very strong, either buyers or sellers. So the way we would use this, or the way we want to just be mindful about looking for these things, is say I'm in longs, right? If I'm in longs, meaning, okay, the market's going up. Let me see, how do I draw on either? All right, so say I'm in longs and we're moving up, and let's just say I have a key level here, right, of resistance. Obviously, the market's not going to always respect my levels, and I don't want to just hop out just because I have a level on my chart. I need to analyze price and volume. This is very simple. But if I'm in longs down here, right, and the market's moving up towards this level, but I'm seeing this super strong buying pressure, why would I get out of the trade, right? So we break past that and you stay in the trade. You don't just hop out because you analyze price and volume. Now say we have another level up here, right? Now, as we approach this next level, we're starting to see these buyers get a little bit weaker. Okay, and so maybe this is time for me to start to look to get out of this trade. Literally so simple, but it's just a lot of people don't pay attention to price action like this, or pay attention to the candlesticks, or pay attention to volume. I don't know why I keep stuttering when I say pay attention. It's not a level. I was giving an example. This is not an actual level. I was giving an example. Actually, in one of the examples I'm going to do from today, I will show you literally something just like this. Okay. But yeah, that was just an example. Okay, if there was a level there, you wouldn't just want to get out. You would want to analyze that price and that volume, okay, and see, because we have those strong buyers here, you don't just need to hop out the trade. And then on the contrary, the way you could also use this is, as we're moving up to these key levels, and say you're not in longs, but you're looking for shorts, you're waiting for a short setup. Say you have a key level up here, you got sellers sitting up here. What you want to see as price approaches that level is, weak buyers. You want to see those sellers start to step in, and we'll talk about the next thing in a second. But that's what you would want to look for if you were on the opposite side looking for shorts. Okay. Second thing, before we get onto the chart to go through some actual examples, is going to be absorption, okay? So, hold on, let me get my little thingy. This is going to be where price encounters significant opposition at a specific level, leading to either reversals or consolidation, okay? And in the example today that I'm going to show you, it's literally from today, from one of the trades from today. So again, I like to show you guys real examples so that you can see that this is real stuff. All right, visual indicators of this: long candle wicks or tails at particular levels. Okay, this is going to indicate absorption. So as opposed to previously those super strong buyers, right? Or in this case, this red, these super strong sellers, with absorption, what we're seeing is a bunch of wicks at one specific level, indicating that every single time in this case, these sellers try to come in, these buyers are absorbing that selling pressure. And there's a possibility that we might start to see these longs come in at this key level. Okay, that's why it's important to, number one, have your levels marked out properly. And then once those levels are marked out properly, you can analyze price and volume at those levels or as you're approaching those levels. Okay, so with that being said, let's go over to a chart now and let's go through one or two examples, because I think that's probably all we're gonna have time for, but let's just go through one or two examples so that we can, see this in real time. Okay, and these examples that I'm gonna do are gonna be from today because I like to use recent examples. Okay, so let's get to it. I'm gonna have to clear off this chart though, because it's a little bit cluttered up. So let's clear this off first. And then let's go to it. Could absorption be the same as rejection based on your explanation? I mean, yeah, price is rejecting the level, but when we're talking about absorption specifically, we're looking for those, like multiple times price tries to push down, we see those big old wicks. It's specifically what we're looking for, if that makes sense. Yes. Yes. All right. First example, we're going to do the shorts from today. All right. So one trade I missed today. I want to walk through that because, hey, there's always stuff that you can learn from. So let's go through that. And then we're going to go through the longs that I took this morning. We're going to break that down in a little bit more detail, going through the price dynamics and all that stuff. All right. So maybe 5 minutes. Again, these trades are going to be from today. Do I take the trade either side of consolidation break, or does it have to be the opposite? Do I take the trade either side of consolidation break? Okay. Or does it have to be the opposite side of the imbalance? It could be either or, but it's just when we're talking about imbalances specifically, and we have that level of support or resistance, the imbalance itself is an area that's going to be most of the time easy to fill. So we're just looking to get the break of that either support resistance to fill the imbalance. But you could, it's different than having like a move up and then consolidating and then continuing to move up versus having a nice clean imbalance and then consolidating. It's a little different, but I get what you're saying. But yeah. All right. I already answered that. Before we get into this real quick, I think I already answered that. I think somebody was asking how to add session volume profile. You would go into indicators and then type in session volume profile HD up here, and then it will come up. All right, guys, trade from today, shorts first. Okay, now I missed these shorts, so let's talk about how to not miss them next time. All right, let's just mark out, because number one, let's go in order. We have to mark out those where areas, okay? So those key areas of liquidity or the key areas where we want to be active. Then we can move on to that next part. So just as far as right now, where are the where areas? On this 5 minute, very simple level, y'all know we marked it out, okay? We marked it out this morning even, okay? We bounce, okay? Actually, y'all, this is not the time, but y'all remember this morning when I was telling you guys on pre-market for those, or I think I mentioned it on the last session too, but what I was looking for today, bounce, pull back, but don't touch, and then move on up. Remember I said yesterday, the reason I'm looking for longs at the bounce of that trend line, look, this was yesterday, bounce, pull back, don't touch it, and then we move up. Exact same thing happened today. Okay, bounce, bounce, bounce. Okay, the point is the market does the same thing over and over and over and over. So that's why screen time is important. Because that's why this morning I already knew before we even had this move up and move back down, I'm waiting for loans. Okay, and we ended up getting into those today. So that was the point of me saying that. But anyways, shorts. We did also have, aside from this trend line here, we did also have on the 1 hour this key level that we needed to get above, which we actually did see some rejection at right around, I think it was 788. All right, so what am I marking, guys? Just recent high over here. So I just marked it because obviously we might see some reaction at that level. Also, we have Bootcamp levels. Okay, now hold on, let me make sure I can see. I need to share my screen. All right, we also have Bootcamp levels. I'm not going to go into depth super crazy about this right now. If you want to learn more about this, it's in the Discord. But anyways, at 2,800, what is this? Like I said, it was around 9:30. I gotta see if I can line it up at the right time for it to show. But there we go. We had a bunch of sellers at 2,800. All right, so this is what it looks like on Bootcamp. If you guys don't know, when I'm saying, okay, guys, we got sellers sitting at these areas. We need to watch these areas. If you're in longs, watch 2,800 because we have sellers sitting there. All right, this is what it looks like. You can see these little numbers here, and then at 2,800 we have 178. So I can see visually on this heat map that there's a lot of sellers sitting here. All right, so that's why I said to watch that level. Now coming back over to trading view, right? These levels on Bootcamp are going to be key levels. Okay, so we need to mark that as well, 2,800, and you would mark that sellers here. Okay, and we did this morning. Okay, we looked at Bootcamp, and then this would just be watch level for now. Okay. But yeah, so we have that. So now, mind you, I missed these this morning, but what could we have done better, okay, to not miss it next time? You know, I'm on the 15-second as I'm doing this, but let's look at this. And actually, we can look at the 1 minute too, but it doesn't really matter. Let's just do 15-second. All right, so remember, we have our levels. We know up at 2,800 we have sellers. We know we have 788 as a key level of, you know, possible resistance, right? So as we're approaching this level, we need to be mindful that we may see shorts come in up here. Okay, so how can I analyze price and volume up at this level to help confirm, are these levels actually valid, and can I actually get into shorts up here? Because a lot of people will say, don't short, you know, the top of a trend, or if the market's moving up, why would you short? But they don't know that there's sellers sitting over 2,800, or they don't know to watch these levels up here where we can see some sort of reaction. Okay, so as we're moving up, you know, we were talking about strong buying, heavy selling, all that kind of stuff. You know, initially we see it's a little, you know, up and down move up. It's not a super clean move up, but in the first half of that move up, we do see buyers are a lot stronger. Okay, look at these strong candles, even coming down. Okay, but these buyers, as we're moving up, are a lot stronger. Now, as we approach these key levels up here, we start to see, you know, these bodies get smaller. We're starting to see more wicks, volumes dying down a little bit, letting me know we're coming up to an area that we might start to see some sort of reaction. Okay, or we know these levels are here, so these levels are probably valid. Just because we see the market moving up, when we see the market is already starting to react at these levels. Okay, now someone asked, how do I use buy sell volume? Not all the time I use it, but I don't use it all the time, to say it better. But in this case, just looking at buy sell volume, you can see, this is not the best example, but the strong buying volume over here as we're moving up. All right, look as we get closer how volume is dying down. Like look at at least all the green candles, only ones that are really above the volume MA are these red candles, right? So even though we're moving up, as a lot of people are not paying attention to, even though we're moving up, what is this chart actually telling me? It's actually telling me that these longs are being exhausted, and it's probably time to start looking for shorts. Okay. So you know, we see this red candle as we start to get closer to that level. These sellers are starting to try to come in. We're moving up a little bit more, but these buyers are very weak. Okay, even here, we're getting closer to that level. Again, these sellers try to step in. Here, you know, this is why I like